Prime Minister Narendra Modi saying that this is a budget which will take India into the future. The idea of a Atmanirbhar Bharat, a Viksit Bharat, underlines the budget's intent, and the Prime Minister expressing confidence that the budget in a way will boost the orange economy, as he calls it, and take India forward. So the Prime Minister making his intervention on the union budget, saying that it will be employment oriented, it will enhance specific sectors, for example, tourism, and that this budget therefore moves in the right direction. Coconut, sandalwood farmers, among others, to benefit. My colleague Abha Bakaya is joining us now. Abha, you track the markets very closely. I'm looking at the markets numbers now, 800 points down. The markets clearly have been completely spooked, presumably, by this higher security transaction tax. Is that alone, or is there something more to it?
It's both the STT and the buyback change that's come in, with now buyback being seen as capital gains, which is not entirely negative, but the markets are primarily reacting to the STT more than the buyback, but definitely both of these came as a bit of a shock. We've recovered, Rajdeep, almost 1,000 points as the markets digest this news, but still, as you can see on your screens, trending weak, so they're not too happy. And remember, today is a Sunday, so we'll actually see the true impact of the budget play out tomorrow when it comes to money markets, when it comes to an FI reaction. I think all of that will really get processed and seen in trade tomorrow as well.
Was it just the STT, or was there something more? Was there something they were expecting that didn't happen, or is it the fact that you have a higher security transaction tax alone that has led to such a big fall in the markets?
So I think it's primarily the STT. Even though there will always be, further measures that they would have liked to see, further ways to enhance FI participation, even though a lot has been already done, or signaled in this particular budget. But I think primarily the STT this time around on the reef.
I'm curious about the buyback thing, the conversion of buyback into a taxable proposition. Punita, is there any history, Abha, you also, is there a history? Why would you sort of enter? This is really SEBI's domain. And, you introduce a tax provision saying that if you buy back, that will be treated as a capital gains. Now, I am wondering whether there has been any misuse of the provision of buyback by any company.
Punita, I'll let you come in, but I think there's also a lot of concern for some of the companies where you have non-promoter holdings. And I think this makes it a lot clearer for them, where it now gets treated as a capital gains tax as opposed to everything else. So I think it helps in that case particularly. But Punita, I'd love to get your thoughts.
No, I'm just going to compare this to what is happening in the US, as President Trump has also changed the taxes on buybacks, because his goal was that companies shouldn't buy back, they should reinvest into the sector and use the money for innovation.
Yeah, for defense companies he did that.
Yeah, and so I think what is happening here is that most of the buybacks are happening largely by IT services companies. That's the biggest chunk of our buybacks. Does this mean directionally that our IT companies, by putting this tax, you maybe are disincentivizing them for buybacks and wanting them to reinvest? And maybe they should, because right now Indian IT companies globally are being seen as laggards. And have lost the plot on innovation, is what FII view.
Or the IPOs that happened last year, where a lot of the promoting entities got exits. 63 or 64% of the IPOs were all about check encashment stories. Whether this blocks them, I'm not very convinced about the logic of this.
Rajiv, you want to tell us what your thoughts are? Why is it that the markets have got so spooked?
So it has got to do with the tax on the futures and options, the extra STT.
That's primarily the reason.
I would attribute it to that, yes.
Okay. I'm joined at this moment by Vivek Singh, economist, former banker and columnist. Also, Srivar Kheruka is co-chairman, FICCI Manufacturing Committee and Managing Director, Borosil. Appreciate both of you joining us. Vivek, your first reactions to this budget. You heard the Prime Minister just now saying it is employment oriented, it will kickstart jobs in specific sectors, mentioned tourism. Do you believe this sectoral approach works in a budget, or should there have been perhaps something more dramatic that would really give the kind of impetus to the economy across the board?
I think it's a fairly balanced and forward-looking budget. And given the kind of overhauling we already had in the income tax slabs last year, and then the GST regime, I really thought there was very little appetite for further tax cuts or for populism. And the budget this time is largely predictable. It stays true to the themes of Viksit Bharat and Atmanirbhar Bharat while taking concrete steps on employment. I'll also describe it as an institution building budget in many ways because it talks about a new National Institute of Design. It talks about a new National Institute of Mental Health and Neurological Sciences. Also talks about an AIMS-like institution in the Ayurveda sector. And then talks about specific content creator led interventions in 15,000 schools all over the country. So many interesting steps, but largely a balanced budget, and stays true to it, to the glide path set by the finance minister as far as fiscal deficit is concerned.
Let's come back to manufacturing and the kind of capex that we've looked at there. And Srivar Kheruka also joining us. Srivar, let me get your perspective on how much of a boost this is going to be when it comes to furthering the capacity that we have for efficient manufacturing, for our export hubs, and so on and so forth. Clearly, an emphasis that has been placed on this and much required.
Yeah, well, I think the government itself has a target that by 2047 for Viksit Bharat, we need to have 25% of GDP coming from manufacturing, which actually, if you look at the numbers, it means that manufacturing has to expand 16 times in the next 22 years in order for the government to achieve its own target. That's a very, high growth rate. That's the expectation. And I guess the budget is trying to move in that direction, whether it's the emphasis on container manufacturing or biopharma or the mining and the rare earths corridors that they've established. Even the electronics manufacturing 20,000 crore boost is in addition to what was announced a few years ago. I think all of these are really going to promote manufacturing in India. I mean, speaking from my own experience, we have seen many products that earlier were being imported from China or from the rest of the world actually being made in India today. Mobile phones also one example. So I think it's a step in the in the right direction.
Okay.